Have you tried diversification? Is it a good idea to invest in a variety of assets? The years 2020 to 2021 were the worst years for most of us. We were hanging by a thread, but we survived. However, it has had an effect, and until now are experiencing some of those, like layoffs, crises, and the economy is trying to keep up. As individuals, we also have to keep up. We need to have strategies for how we can survive in the future. We need to invest in assets that cannot be affected by any situation, whether highs or lows. You may be thinking, what is the wisest thing to do? Check out this video because this may help you find the best asset to invest in to survive 2023. Let us learn from what Jim Rickards has to say. If you haven't heard about him, Jim Rickards is an American attorney, economist, investment banker, speaker, and media analyst. He is also an author who specializes in money and precious metals issues. He authorizes 6 more publications besides Currency Wars, The Building of the Coming World Catastrophe. Jim Rickards guested on Wealthian, discussing diversification and sharing where to safely invest this 2023 to survive whatever the season is. He started off with diversification.
The first thing I say, diversification, the math and the science behind diversification and why it's a good strategy is very clear. There's not much debate about that. The problem is people don't understand what diversification means.
What is diversification? A portfolio's investments are mixed in a wide variety as part of the risk management approach known as diversification. Instead of reducing exposure to any asset or risk, a diversified portfolio combines various asset classes and investment vehicles.
So what does a diversified portfolio look like? Well, I have a slice of stocks. I'm not anti-stock market, but you got to pick the sectors and the stocks that will perform well, even in the kind of conditions we're talking about.
This strategy is justified by the idea that a portfolio of various asset classes will, on average, produce superior long-term returns and reduce the risk of holding more security. Research and quantitative simulations have demonstrated that the highest cost-effective level of risk reduction is achieved by maintaining a well-diversified portfolio of 25 to 30 equities. Even though they occur much slower, additional benefits of diversification are nevertheless produced by investing in more stocks. In order for the beneficial performance of some assets to offset the bad performance of others, diversification's purpose is to smooth out unsystematic risk occurrences in a portfolio. The benefits of diversification only apply if the assets in the portfolio are not fully correlated. In other words, if they react to market factors differently, frequently in opposite directions. Now that we have understood diversification, let's find out what 3 assets are best to invest in this 2023 by Jim Rickards.
So there is a portfolio you can have, which is natural resource oriented, that will do well, even in the kind of tough environment we're talking about.
Number 1, natural resources. Natural resources are traditional goods like oil and gas, base and precious metals, and materials and technologies that facilitate the multi-decade switch to renewable energy sources. This wide-ranging scope provides a diverse opportunity set far beyond conventional commodity markets. For instance, the production of heat and electricity both contribute almost as much to world emissions as agriculture. As a result, natural resources encompass various developing agri-food-related markets, such as precision agriculture and alternative proteins. Businesses looking for cutting-edge ways to obtain, produce, distribute, consume, and maximize the usage of commodities and services. Renewable and alternative resources, base and industrial metals, gold and precious metals, oil and gas, agriculture, paper and forest, and industrials and utilities are the different types of natural resources. Natural resources are excellent inflation hedging strategies. Historically, natural resource and commodities investments have been a great method to diversify larger stock and fixed income portfolios, obtain access to global growth, and protect against inflation. Number 2, gold and silver. Natural resources are very broad. They still cover gold and silver because they belong to precious metals. Jim Rickards emphasized these 2 metals, and he said,
if you have a recession, it's perhaps the case that the monetary value is going up, but the industrial input value is going down. So it's a little bit more of a mixed bag, but silver is going to do fine. And I do think it's extremely practical.
What justifies gold investments? Know that gold is a fantastic inflation hedge if you're considering investing in it. Gold and other rare metals have traditionally been regarded as shrewd inflation hedges. That's because, despite changes in the dollar's value, it usually maintains its value over time and keeps your purchasing power. Looking ahead to 2023, when inflation is expected to remain strong, now would be a great opportunity to expand investments in gold. Analysts have demonstrated how effective gold has been as an inflation hedge over time. Based on what we can infer from recent economic data and the Fed's stance, it's unlikely that the economic suffering will ease anytime soon. It's likely that the economy won't recover shortly because of massive government spending during the shutdowns, a land war in Eastern Europe, persisting supply chain problems related to a resurgent COVID-19, and other factors. Given that gold has historically outperformed other assets during inflationary periods, all of this is positive for the metal. Gold is a good idea. But Jim Rickards put more emphasis on silver, and he added,
in a world of CBDCs, silver will be a form of spending money. Gold, even the 8-gram coin I mentioned, the quarter ounce American Gold Eagle, still $500. It's like pulling a $500 bill out of your wallet. You know, it's a lot for groceries.
So why should I invest in silver? The demand for silver has surged in recent years, which is the main explanation, and even more so during times of world economic crisis. There are compelling reasons to include physical silver in your investment portfolio at this time. For diversification, silver is vital. A member of the precious metals asset class like gold and silver protects investors from political control, hacking, and stock market crashes. In addition to being a store of value, silver has a lengthy history of maintaining its purchasing power. To reduce geopolitical, monetary, and systemic risks, investors frequently use silver as a strategy for portfolio diversification. The ideal situation is to keep a healthy ratio of silver coins to silver bars. As a result, there will be a greater probability of gaining investor interest because various investments will boost portfolio diversification. American Eagles in silver are one of the more typical examples of silver. Number 3. Real estate/private equity farmlands. In our other videos, some experts believe that investing in real estate might be a bad idea, but Jim Rickards implies that it still has a chance. So long as it is getting income, then it would be fine, according to him.
Yeah, income producing real estate. I wouldn't get into commercial real estate, residential. The prices are, home prices are coming down a little more in some markets than others. But if it's income producing and it's solid and it's in a place like, someplace people want to be, like Austin or Phoenix or whatever. I mean, I know there's markets down a little bit right now, but it's like buying a 10-year bond.
Over time, residential real estate has shown to be a wise investment. There have undoubtedly been instances where weak market circumstances caused prices to fall and sales to stall. Since real estate values often increase over time, you might eventually receive a sizable return on your investment. Also, you might benefit from a consistent flow of passive income if you elect to rent out your house. The fact that real estate is a physical asset is what really makes it stand out as an investment. The possibility for long-term appreciation, passive income, tax advantages, and a tangible asset make investing in real estate in 2023 a wise financial move. So why not invest in real estate this year? You might regret not doing so. We are all familiar with this saying, tomorrow is not promised. That is why investing in the right assets is a good idea. The diversification strategy is a risky one, but a wise move as well. Its purpose is that if one fails, then you still have more investments left. We hope we have given you enough ideas in investing and getting through the year 2023. What do you think about this topic? Do you agree with me too? Share your thoughts in the comment section below. Don't forget to like, share, and subscribe. I'll see you in the next video.